Up until 3 years ago, I lived and worked in London and got to know a lot about the international insurance regulatory scheme, as they say, not in a pejorative manner, in London. And so I was pleased to be asked to moderate this panel. I was even more pleased when I not only saw the title of our topic, but perspectives on global insurance regulation, but also the panel that folks had put together for me and for you. It's been, I'm excited about the opportunity here where the panelists converge and diverge on their perspectives on global insurance regulation and what is and is not innovative in what's happening out there as far as multi-jurisdictional regulations. We will hear from each of these speakers. They're going to introduce themselves before I start peppering them with questions, but we will hear perspectives from a former regulator who is at the NAIC. So we'll hear sort of the regulator perspective. We then have a domestic insurance company, domestic insurance group, and we have a European-based insurance group. So again, I think on some of the points, they'll have similar views. On other points, they will have dramatically differing views on, again, what's good, bad, or indifferent about what's happening in the global regulatory space.
Supervisory cooperation has been the hallmark of the NAIC, and it has enabled the states to coordinate and collaborate across borders for many decades. The NAIC was a founding member of the IAIS back in 1994 and continues to provide really significant resources to the IAIS. State regulators are also involved in international supervisory colleges where the hands-on supervision and coordination of large multinational insurers takes place. We generally support the aims of global standards to elevate the effectiveness and the efficiency of regulation and supervision and to provide stable and competitive markets worldwide.
When we look at the insurance industry, being a large reinsurer but also active on the insurance side, one of the concerns that we have is the very large and growing protection gap that we see in the world. And the protection gap being the difference between economic loss and insured loss. And specifically, we did a report last year as an example to show the difference between property economic losses and property damage versus the insured losses of property damage over the last decade. And what you find around the world is that only about 30% of those losses are insured. And that's an issue. Because we're here in the insurance industry, it's our job to protect the assets of individuals and businesses around the world to keep economies running and to keep businesses in place and to keep individuals protected. And if their assets aren't in our safety net, then they're not as well protected.
Similar to the banking world where you have had in place the banking level, Basel 1, 2, now 3, these should be of interest to all insurers, though, because the way the system typically works, these rules tend to be applied on a broader level over time. So we think it's very important. Certainly MetLife will always be an IIG, but we think it's of interest to all insurers.